Hello, investors. This is Zhang, Portfolio Manager at Revere Asset Management. Today is Tuesday, March 18th, 5:10 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Stay in the market. We are in a moderate correction. Market leaders with the down arrow. We are able to come up with a 21 over 21 list, but still not robust, and weakness continues. Short term, all major indexes are below the 21 EMA, and therefore we have a red arrow there. Medium term, still with the red arrow, major indexes below their 50-day moving averages, and long term, we're close to entering just a true downtrend here. We're giving it a little bit of a buffer, about 2.5 to 3% below the 200-day moving averages, but right now everything is living below the 200-day moving average. What happened today? Market weakness led by big tech continues. 21 over 21 list down 1.75%. 6 stocks up, 1 neutral, 13 down. Big 8 down 2.52%. Tesla's down 5.3%. And new lows, NVIDIA down 3.26%. Meta down 3.68%. RGA down 1.52%. S&P 500 down 1.07%, RSP down 0.52%, QQQ down 1.69%, QQEW down 1.15%, Dow Jones down 0.62%, mid caps down 0.78%, small caps down 0.89%, global 60/40 equities bonds down 0.41%, and GROTECTION down 0.20%. So jumping right into the S&P chart, we had the swift rally down, this frozen slope, if you want to call it that. 2 days ago, we broke above the downtrend line, and we rallied one more day on elevated volume. Didn't even reach the 200-day. You put an 8 EMA, we briefly closed above, but now we're back below the EMA on today's kicker candle, a gap down, and pretty much no bounce at all. If we go on a 5-minute chart, you see this gap down, and we bar-coded the rest of the day. This just means there's absolutely no buyers right now. We gapped down, sold off, and just bounced around this tight range for the rest of the day. Indecisive action with FOMC tomorrow. With S&P 500, if we go on a longer-term weekly chart, you can see we had this about June 20th to March 2022 run. It's about a couple of years almost since the top. Now from this bottom around October 2022, now we've had this bull market for over 2 years now. And when we draw this longer term upper trend line, we crack that as well. You've seen me talk about stage analysis multiple times. You can look at the previous cycle. Once the 10, 20, 30, 40 aligned and turned up, that's when we had a nice steady uptrend. And when they aligned to the downside, we had this 2022 inflation bear market. Once again, they lined up. We had this AI-fueled bull market, and now they're starting to align and turn downward. Perhaps the same thing like back in 2022, aligned to the downside. 10 is below the 20-week. They look like they're heading for the 30-week. 30 and 40-week are flattening, and there's just enormous amounts of distribution in the markets right now. 1, 2, 3, 4, 5 weeks in the last 8 weeks of above average distribution volume. So, and not a good sign for the markets here. RSP also cracked the longer term downtrend line, living below the 200-day moving average and 40-week now. Came up to the 200-day, rejected that, and living below still so far. Tech continues to remain even weaker because of the mega cap weighting. Same thing, kicker candle today, sold off. Just enormous amounts of distribution. You can see pretty much a wall of red volume here, and this looks like it's resolving to the downside soon. QQEW, same thing, gap down, pretty much held at the lows, still below the 200-day moving average. Dow Jones rejected the 200 as well. It's not still living below the 200. Mid caps even weaker than the previous 3 indexes. Really just no strength or buyers here at all. And same with small caps, similar to the mid caps. Extremely weak action. Below all key moving averages here. Now to the VIX. Although we've pulled back here, we still held the 20 area, so volatility stays elevated. If the markets are setting up for another downside move, I wouldn't be surprised to see the VIX spike 30, 40 plus. Maybe that does put in a final tradable low before we get another bounce in just in the overall markets. Dollar continues to make new lows, and on the flip side, gold makes a new all-time high. Gold miners fall out as well, even though it reversed a little bit. 6 days up in a row. Great breakout of this cup with handle. Perfect action here on gold miners and gold. This is telling me and telling us that there is a flight to safety right now to gold and silver, these real assets. This could mean many things. Perhaps people are uncertain about the global economy right now. Perhaps we enter a recession and then the Fed starts the money printer. And with that, people want to own these real assets because owning anything else, really the inflation and the new injection of money into the economy, that's kind of what happened previously as well. Commodities are actually extremely undervalued compared to equity prices historically right now as well. Silver also broke out this cup with handle. We've talked about this on the videos in the past. Really clean cup with handle. Volume patterns are perfect. RS line new highs as well. Continuing on, Bitcoin, however, does stay weak. We look at a trading view chart. It is now living below the 200-day moving average, but still trading above the 40-week moving average. Bonds are actually setting up here. This is a really nice flag, really tight flag. You had a shakeout date on March 13th as well after this move up. And we've seen Besson and Trump talk about how their goal is to bring down the 10-year yield. And they believe that's their primary objective right now, to refinance the 7 trillion plus debt at lower rates. And it seems like they're going to do whatever it takes to scare the markets to get that 10-year lower and the Fed to cut rates. Same with the TLP. This is definitely on focus as well. Really tight flag here with a shakeout within the flag. And we look at TNX, which is 10-year yield. You can see it's kind of bear flagging as well. And on the weekly, already made a huge move off the lows. And we'll really see what happens if a recession does start. This is a decent bet in a flight to safety move along with gold and silver. Also, historically, bonds are one of the most disconnected from equities ever. So it does present a decently asymmetric trade if the thesis does play out. With that said, that's it with interasset correlation. Now to the tail of the tape. In a moderate correction, still operating on the bear case, below 21 EMA, below all key moving averages actually. Some news today. Putin and Trump had a talk and they discussed, and Putin agreed to currently a energy and infrastructure ceasefire with future talks for a permanent ceasefire and hopefully lasting peace. Building permits came out slightly stronger than expected, which is a good sign, but still lower than the previous reading, which does show deceleration of building permits. And building permits is a leading economic indicator along with the stock market, bond market, consumer confidence, consumer sentiment, which we knew from last week came in softer than expected. And then tomorrow is FOMC. Right now, there's a 99% probability of no cut. And that makes sense because tariffs theoretically could increase inflation. So they're not sure they can continue their easing because that could trigger more inflation in the economy. But at the same time, Doge and the government are also cutting many jobs and we're deporting many illegal immigrants right now. So the labor market could stay weak. So that's another lever that they are thinking about as well. So since they're unsure, they'll probably just stick with no cut, which is what the Fed swaps are pricing in as well. Today's keys, look at the S&P versus 200-day, close below. RSP versus the 200-day, close below. QQQ versus 200-day, close below. The percentage of S&P percentage versus 5-day leaders. Yeah, we're already pulling back from the overbought territory just above the 5-day moving average. Day count up 2 to down 1. Back below the 8 EMA, so day 1 below the 8 EMA. Day 18 below the 21 EMA. Expectations are definitely negative here. And like I said, action, we gap down, sold off to 55.97 and then bar coded for the rest of the day. Some strong sectors, bonds were up as bond yields were down. Gold, silver, copper were strong, energy, and healthcare as well. Dollar was down, mega caps led the way down. Bitcoin weak, RK and XPI were some other weak sectors. We did nothing today, 0.31 beta, minus 1.27% open heat, and bottom line is market weakness led by big tech continues. Wednesday's keys or tomorrow's keys, we're gonna watch S&P versus 200-day, RSP versus 200-day, Qs versus 200-day. Pretty much the same thing as what we came into from today. And so now let's jump in and review some other pieces of news or data points I wanted to show. So if we go to the MAG 7, the MAGS ETF, this has been relatively weak to the S&P. You can see the RS line. And the RS line actually made a new low today. Price actually made a new low as well out of this bear flag. Go on a 60-minute, you can see this bear flag better. Broke down from that. And here are some stats I wanted to show. The largest 10 stocks at one point peaked at 39% S&P 500's market cap in January. So MAG 7 plus 3. And the MAG 7 index is down 12% year to date versus minus 1% for the S&P 500, excluding the MAG 7. So you can see how consequential the MAG 7 is for the S&P 500. And if they are going to head lower, that's definitely going to drag the S&P 500 with it lower, as well as the NASDAQ 100. So we quickly go over the MAG 7 because I think it's really important and it's leading the indexes down right now. Is Apple broke the 200-day below all key moving averages, bear flagging. Amazon bear flagging and actually resolving to the downside today, below 200. Microsoft also resolved to the downside off a bear flag. Meta looking to test the 200-day. Look at all this distribution in Meta recently. RS line cracks as well. NVIDIA breaking this rising wedge in the 21 EMA. You had this big volume sell-off, rally on declining volume. Then you had more distribution, rally on declining volume, and now we had more volume come into today. That's exactly the opposite of what you want to see in an uptrend. In uptrends, you want to see big moves up on elevated volume and then gentle drift pullbacks back on lower than average volume and then big moves up. Now we're having the exact opposite. We're having big moves down and then we're having slow drifts up on declining volume. And we're having big moves down on elevated volume. Then we're having these rallies on declining volume. And now we're resolving to the downside on elevated volume once again. Google led the show today to the downside along with Tesla, broke this bear flag and 36 RS rating. Just not a great look. Netflix wedging into the 50 and 21. Seems like distribution is coming back in. And Tesla, the biggest one down today, also breaking down with elevated volume coming in. The mega caps are weak. And to me, this is going to be the year of short mega caps and long emerging markets like China tech. So on to the 21 over 21 list. Let's get rid of these. Start at the top. AR, this is a coal stock and some other oil and gas exploration acting strong. Blue dot RS have this double bottom base-ish here. So we'll see how this does, but it's not really some name we'll be dying to get into, especially with how weak everything is. Gold continues to make a new all-time high. Just extremely strong action here. Yumsi, a Chinese retail name, came out of this big base. Some nice VCP characteristics in this base. Gold miners, I already talked about this. Great action. MP Materials also breaks out this cup with handle. Emerging markets like European stocks came out of this huge weekly base, and this looks like it's off to the races. The money is flowing into international markets and out of US. It is clear as day at this current point. Silver remains strong as well. On the downside, lemonade down 8.2%. This is just a volatile bucking bronco at this point. You really need this to clear at least 38 for any hopes of it getting moving. SE down 5.7%, back to the 50-day. Spotify down nearly 5%, projected 600. This is still fine action right now, definitely relatively strong versus everything else. Palantir down 4%, living below the 50 and 21 EMA, breaking this bear flag. WGS down about 4%. Now it popped up inside day and now back down to testing those recent lows in the 50-day moving average. BABA consolidation day, inside day, fine action there. TGTX pullback as well. But this is nice drifting action. You see how volume declines as it pulls back. DoorDash forming a bear flag at the 50 and 21. That looks like it's going to actually break down here. Okta is one that's actually acting really well on this post-earnings gap action. Gapped out, pulled back, and now we're breaking out so far. So overall, really weak action from the markets. We have FOMC tomorrow. So it would be really important to see how we react off FOMC, what Powell says, and what the Fed statement says as well. There's a lot of economic uncertainty, and that is why we've seen some of the biggest outflows at hedge funds, especially hedge fund manager sentiment decline as well. That being said, I'm going to wrap it for today's video. As always, if you're interested in becoming a client or interested in what we do, you can email me at ted@revereasset.com. My Twitter or X is TedHZhang. Code is 855 real wealth. That's 855-732-5932. Our website is revereasset.com and our YouTube is Revere Asset. That being said, we'll wrap up today's video. This is Ted Zhang, portfolio manager at Revere Asset Management, telling it like it is. Thanks for listening and have a great rest of your week.